This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
We've looked at what might be called ordinary controls that you would typically see in sales systems, purchaser systems, wages, inventory, cash, and of course the capital expenditure. We now have to spend a short while looking at controls which you would expect to see in a computerized accounting system. And by and large, these are kind of on top of the controls we've already looked at. You still need authorization. You still need to ensure that there's a complete and watertight audit trail from the start of a transaction to its finish. Computer controls divide into two families. First of all, there are what's called general controls. These are sometimes regarded as controls over the kind of environment in which the computer system is sitting. These are not controls specifically for the wages system or sales system or purchaser system. They are to do with the setting almost which the computer system is operated in. And these controls should be exercising some sort of discipline over the sort of items which are listed here. So development of new programs or the updating of existing software. Huge damage can be done if you make an error in software development or software modification. A few years ago, a very large bank in the UK did what they thought was a routine update to their system, but something had gone wrong in the coding of the new program that was being made live, and it meant that many customers couldn't get access to their accounts for over a week. They couldn't get money out of the automated teller machines. They couldn't find out what their balances were and the like, all because of probably one line of code which was wrong. We have to also prevent unauthorized changes, and this could be changes which are of course triggered by a virus. And you just have to think of the damage that can be done if a virus comes in. It begins replicating itself. It wipes your files, wipes the records of your receivables. You're going to be in severe trouble. Also, we should mention the important controls that there ought to be over hacking. And this is normally controls which are brought in with something called a firewall. Remember, if your computer is connected to the internet, then the internet is connected to your computer, and it means that in theory anyone who's on the internet could get access to your computer if it wasn't for the presence of something that would stop that. And again, there have been some very famous hacking examples. The most recent and very serious one was hacking into the Sony system, and some films that hadn't yet been released were copied out. All sorts of emails going to and from producers about film stars and so on were released, to the great embarrassment of the head of Sony, who is now had to resign. One of my friends works for Sony. He's in the sales department. He sells films. He's quite high up. But he was going along to clients to try to sell films, programs and so on. And even in London, had no idea really what they'd previously sold those clients or what prices they'd charged, because all of this historic data was also lost. And it took him a long time to kind of reconstitute that data. You should, of course, take backups. You should take copies of the data, and you should take these copies and store them in a remote location and so on. But what happens if the hacker has been playing clever and has actually been doing damage for maybe several months before you know? Then it could be that all these backup copies are also irreparably damaged, and you're not really going to get your data back again. So these general controls over access, almost physical controls as well, to make sure that your computer and your files are simply not physically stolen, and then the information can be perhaps released. very important indeed, especially as more and more companies rely on the integrity of their data for not only their financial statement records, but lots of other operational data. And then we have something which is called application controls. Called an application controls because these are specific to a particular application, the sales cycle or process, the purchases process, paying wages, perhaps in construction contracts in a large manufacturing or construction company. What we want to be careful of here is that the input to the initiation is correct. What is a characteristic of computers tends to be if you put in wrong information at the start, then the system will just kind of process that come what may, without necessarily any kind of common sense intervention leading to that data. It has to be recorded completely and accurately. We have to make sure it's processed accurately. And finally, we have to make sure that the results are given to the people who should be getting those results. It needs to be a form of confidentiality. If you think about people's wages and salaries being processed on computer, you don't want anyone just to be able to log in and get access to your wages and salaries. What are the various ways? Here we have the input to processing controls over what's called standing data, controls over output. This mentions here something called standing data, and standing data is sometimes called reference data. This is data which is referred to, which is used, but which doesn't change very much. It can in a way stand still. And the sort of data that you have here would be, say, an employee's name, an employee's bank details. They pretty kind of static. The employee's rate of pay is probably going to change once a year. Prices of goods, the selling price of a good is only going to change fairly rarely. This has to be contrasted to transaction data. So every sale you make, there'd be different quantities of goods sold, there'd be different types of goods sold, they'd be sold to different people. That's transaction data. It tends to be effective once, so to speak. But the standing data, the price of an item that you're using to raise your invoices, is going to be used over and over and over again. And a characteristic of the standing or reference data here is because it's referred to over and over and over again, one error can give you many. So you get the selling price of an item wrong on the inventory file, or some of you many invoices which are incorrectly priced. And again, there have been some fairly famous examples of this. It often happens not often, but occasionally happens in airlines, where instead of typing in a fare of, let's say, $500, they get it wrong and type in a fare of $5. And of course, the news of this very good value fare sweeps around the internet pretty quickly, and they find they've got a lot of full flights, but none of them actually making any profit. And most airlines say this is an obvious mistake, and they reverse the contract. They won't hold you to it. But this reference data, it sometimes takes special measures, because if you think of somebody's pay, you kind of put it on, what's the incentive to check their pay again, that it hasn't changed, or that it was put on correctly in the first place? Similarly with the selling price, you update the selling price. There's not much incentive maybe to keep examining the selling price to see if it's correct. And what you tend to have to do with a lot of standing data is you actually print it out. You print it out at least once a year. You distribute the data to the people who should know whether it's right or wrong, and you get them to say, yes, that's right. They have to kind of verify these items of information individually. Real-time systems. Real-time systems, this is where most systems are real-time nowadays. You log on and you can process a sales transaction in real time. A customer rings up and places an order. It's kind of typed in real time and a dispatch is triggered. Internet systems, ordering over the internet, are very much real-time systems as well. If you order something from Amazon, Amazon immediately grabs the money from your credit card account, and the whole process of the picking and packing and dispatch of the goods is pretty well automated from then on. The problem with some of these real-time systems is that there's a bit of informality about it. You have a sales team, a telephone force, if you like, of 12 people. A customer rings up, speaks to one of them, and somebody puts in that order but puts it in incorrectly. How do you know which one of those 12 salespeople was responsible for putting in that order? If there's a query on it, to whom do you go to? If there's an error, who do you have to maybe reprimand or put an extra training and so on? We also have to be wary of a lot of computers just kind of sitting around the office on a network, and maybe during lunchtime, nobody much in the office, somebody comes in and begins doing their own transactions on a computer which has been left live. So one of the first things you need is access controls. Access controls historically have been through passwords, though increasingly biometric methods are being used. Your fingerprint or your retinal pattern or something will probably become more common in the future. You have to control the passwords. You have to make sure that passwords don't become generally known. And we may have seen situations where somebody's sitting there, this is their computer monitor, and up here there's a little bit of a piece of sticky paper, and there's a password on it, or the password is in a bit of paper in the top right hand corner of their desk, and that's not too good at all. Some people, you're warned against having passwords of 1, 2, 3, 4, 5 or the like. Some companies take the view that what they will do is to issue you with a password, a mixture of uppercase, lowercase, numerical characters and so on, and insist you use that. Then they change it every 3 months. The difficulty with that is, if you have a very complicated password, you kind of have to write it down to remember it. Other companies say you can choose your own password, choose something memorable but obscure, but again they could enforce a kind of rule where you have to change this memorable password every 6 months to try and make sure that the security is maintained. A programming control is where you have to say, well, who can run what programs really? Who is allowed to run the wages program? You don't want it to be run twice a week or twice a month or whatever's going on. Transaction logs. Transaction logs will allow you to print out a list of all the transactions which have been processed in the day. This can provide quite a useful audit trail so that you can trace back and see maybe exactly who did what. The really good way of organizing your passwords is if when somebody logs on, then every transaction which they process subsequently can be kind of tagged with an identifier so that they know they do something wrong. It can be traced back to them. File controls, to make sure we're using up-to-date files and not processing a file maybe from a week ago. Balancing, making sure the trial balances, making sure the control accounts reconcile to some of the individual accounts and so on. Pre-processing authorization. Who is going to authorize a salary rise? How do we know someone has authorized a salary rise? And very often still salary rises, significant changes in pricing, maybe setting a credit limit for a new customer. You want a piece of paper that you can go to. So instead of this being a computer screen, this is now a kind of salaries amendments document. We'll call it a SAD, though it should be happy. And somebody will authorize that physically, and nobody will type in a new salary until they get this document. Systems development and maintenance controls. Systems development and maintenance controls are very important. we have to be kind of a little bit just careful about using. Let me just get rid of that. Then I have got some space here. Have to be a bit careful about updating programs. To some extent, this is going to overlap here with the development. Okay, so we're just expanding some of the care we need with the development of new programs and new systems. If I were going to commit a fraud using a computerized accounting system, I have a bit of a choice, but let's say what I'm going to choose is I'm going to commit this fraud through the salary system, because of course I'm going to be paid a monthly amount anyway, and it's maybe not going to raise immediate concerns. Really, I've got two ways of committing the fraud through salaries. The first method which I have is I can change my salary. So let's say I manage to find the right logon details that gives me the access, gives me the authority to go to the salary system and to change my own salary. Okay. So I double the salary, put it up 5 times or 10%, whatever you think is best. Whether it's best to commit a small fraud frequently or a big fraud once, I'll leave up to you. But I would suggest that if this fraud is discovered, this overpayment to me is discovered, one of the first places they will look is they will look at my salary information on this file, and they will see it's wrong. And furthermore, it could be tagged with my identifier so they know it was me who changed my salary. So the game would be up. The other way I could go about committing a salary fraud is not by changing the data, changing the salary, but is by changing the salary processing. So here we have the salaries, the program that we're going to change. And what I'm going to do is I'm going to put in a little, what's called a little decision box here. And I'll say, is employee equal to X, where X would be my employee number or some identifier of just me. So as we're processing maybe thousands and thousands of people's salaries, everyone is saying, is it employee 123, 123, 123, or whatever my salary identifier is. And as soon as it gets the answer yes, it'll branch off. Okay. Most salaries and most people will go straight through this because they are not the particular employee code represented by X here. And what I do here is I put in a little line of code here, salary equals salary times 10 or times 100 or whatever. And then it'll just kind of join on again. And that can be done in a programming language in one line of code. It's one extra line of code, maybe out of thousands of lines of code in an accounting system. And I would suggest that tracking down this change is going to take a long time. I would say this is the more successful way of committing a fraud, more obscure way certainly than doing it through changing data. Now I've kind of dramatized this by giving the example of salaries, but most errors which happen in accounting systems are innocent errors. What would happen if the VAT changed? Let's say the VAT went from say 20% up to let's say it went to 15%. Okay. So when you're working out what the VAT is, you should be saying something like the VAT. It used to say equals the net times 0.2. That was the old one, but by error the programmer puts in for the new one VAT equals net times 0.015. So essentially charging a 1.5 rate of VAT rather than the 15% rate of VAT. And all the invoices are now going to go out incorrectly. They're not going to add enough VAT, but the government will insist that it gets its 15% on the sales. And this could this innocent error of getting the decimal place in the wrong place could ruin the company. So it's very, very important that when programs are changed or systems are developed, that they undergo very thorough testing to make sure there's no error like this, to make sure that they don't work so slowly that they're going to irritate your customers, and you're going to be losing sales. Now, if we just go back here a little bit and just look at the types of control that might exist over the input of data. So let me just get rid of this stuff on reference data, and we'll look here once again on the input controls that might be possible, just to give a little selection of them. Remember, the importance of input controls is that once something is put into the computer, the chances are it's just going to churn on doing its calculations, even though the input was obviously rubbish. What we're particularly interested in input is making sure, well, let's say it's been authorized already, but then we have to make sure it's input completely and accurately. Completely and accurately. How can we try to solve these problems? And there are about 5-6 ways in which you can do it. First of all, you can have something called edit checks. There's a whole family of edit checks. So, for example, you can have a range check. So a range check means that you can't put in a number which is outside a range. So if you were trading 6 days a week, and what you were supposed to be putting in is 1 to 6 to denote what the trading day was, this wouldn't allow you to put in the number 7 or 8 or anything of that sort. Sometimes it can be done by a drop-down menu. That's almost a range test. Menu drops down. You have to choose one of these things here. You can't be putting anything which is, desperately wrong. You can have a format check. So when you're putting in your credit card number, there's 16 digits in the long number along the front. If you put in the wrong number of digits, it will immediately come back to you and say that's wrong. This cannot be a valid credit card number because it's not conforming with the format that we require. Or again, you're asked to put in your date of birth. You have to look quite carefully if it's day, month, year, or if it's day, month, year, to get it right. It will spit it back at you if you get that wrong. You can have things called dependency checks. A dependency check is where one piece of data implies something about another piece of data. And again, you've almost certainly experienced this, maybe when booking airline flights or booking a stay in a hotel. Sometimes one contrives to book the return journey at a date earlier than the outgoing journey. And it recognizes this. It will say you can't come back before you go, kind of thing. That's a dependency check. There's nothing wrong with either date independently, but together they don't make sense. And the last one we'll have here is what's called a check digit. A check digit test is where a number like a part number or an account number has been specially constructed so that when you do a bit of the arithmetic on it, it produces a certain result. So a very simple check digit test would be whatever part number you have, let's say it's all numerical, If you divide by, let's say, 13, it will divide even if by 13 there's no remainder. The chances of you typing in a number incorrectly, which still divides by 13 with no remainder, is very small. And a lot of large numbers are VAT numbers in the UK, but a sophisticated check digit test to try to identify inaccuracy on the input. Second one, and this is going to do accuracy. Second one we can look at is a sequence check. A sequence check is going to do completeness. So for a sequence check, you need to be putting in essentially numerically pre-numbered documents. A good example is checks in the checkbook. They're all uniquely and sequentially numbered. All the system has to do is to keep a record of all the check numbers submitted, and if you try doing one twice, it'll object, and it will print out a list of missing check numbers at the end of the period, or perhaps warn you that you seem to be missing out a couple of numbers when you go to process some check payments. Sequence check does completeness, doesn't really do accuracy very much. There is a matching test. Good example of matching is, let's say, everybody in the organization is expected to submit a timesheet every week, and all it has to do is say, well, here are the employees, here are the timesheets we've got, and look, this one is missing. This person hasn't submitted a timesheet or a clock card, and this is essentially going to do completeness. Again, we maybe have examples of that in the, let's say, the purchases system. We have a file of purchase orders which we have issued to suppliers, and then when we get goods received coming in, we match the goods received notes to the orders, and automatically it will say, look here, there's this order which is not yet matched with receiving goods. Perhaps something has gone wrong with that. That's primarily completeness. You have something which is called one-for-one matching. And one-for-one matching is used for what I call awkward data. So you have a new employee who joins, you have to put in this person's name and their address, and quite obviously their name and address isn't going to conform with a particular format, a particular range of values and check digit. This is very awkward, unique data. And the only way you can deal with new employees, new customers, new suppliers, perhaps new parts with a fancy description, which don't comply with any pattern of data, is you put it in, you get a printout of what you put in, and then you compare that one-to-one, eyeballing it really, to look for discrepancies. This will do, if you keep a record of all of these documents, both completeness and accuracy. And the final one is going to be a batch total or a control total. Again, this can do both completeness and accuracy. Let's say I have a bunch of 3 invoices I want to put in. So what I do is I got my invoices. And my invoices have on them 100, 150, and let's say 80. So 250, you've got 330. I put the total on there. This is what's called a batch header or a batch total. So when I'm putting in these 3 invoices, I've already pre-listed them, added them up. I'm kind of telling the computer, look, 330, I put that in first, and I say the sum of the invoices coming in next should match to 330. And quite obviously, if I mistype the 150 as 140, it isn't going to reconcile. If I turn 2 invoices kind of over at once and missed one of them, it's not going to reconcile either. Batch controls were a very powerful method of controlling accuracy and completeness. But you did have to have a batch. You did have to let the transactions kind of accumulate maybe to the end of the week and then process them. This doesn't work in real-time systems where you tend to be processing items in a way one at a time, and the concept of a batch is simply not there.